All right. So, welcome to Game Plan Sunday. Today is February 21st, 2021. Take a look at the markets here. The markets were pretty down for the most part of last week, led by the Dow Jones Industries at 0.11%, and the dollar was negative 0.12%. The S&P 500 negative 0.71%. The Russell 2000 was down negative 0.99%. Also, oil 1.16%, and the NASDAQ 1.5% negative, and gold took a beating at negative 2.29%. So that's the way the markets were looking last week. Bitcoin actually rallied up almost at $60,000 here. There's no telling how high Bitcoin can go, which brings interesting conversations of topics that we will discuss later on in the session here. But just taking a look at, what happened over the course of this past week. So we had the holiday on Monday, so it was a short week. Markets came back, and we had the Gamestop hearings, which was very interesting. Me and Topaz, we were actually chiming in together while we was watching it live. Also in the chat room, some of you guys were in the chat room while it was going down live. Made interesting conversation, but it was a lot to learn from the hearings. I know some people was like, man, forget all that. I just want to make some money. But it's important. You guys got to understand, like, the trading stuff that you learn is pretty much basic. After that, the rest of the learning is real world application, what you're going to learn by being in the markets. Okay, the markets are not static. They always change. Okay, they're changing constantly. And so we're trying to, cater our strategies to the changing times and lots of different changing variables. But what's interesting is what you will learn from that hearing and from the GameStop situation. So it's really interesting to see. You heard from the Reddit guy, you heard the CEO of Robinhood, who, Topaz says the guy has his hair is laid. He has a silk press with the bob cut, you know what I mean? So he looks like a mixture of Ike Turner and Martin Shkreli. That's what we were laughing about. But it was interesting. But they were actually tearing his ass up. You got a lot of especially a lot of the Democratic senators that was actually, crushing them. And you also had the head of the clearance company that they use also. And they just wasn't letting this guy live. He couldn't even speak. He was trying to explain to them how the markets work and, behind the scenes stuff that I've been trying to, tell you guys about here for quite some time, when I even introduced you guys to the dark pools book and stuff like that, so you can understand the plumbing of the market, what's really happening. When you go and buy and execute a trade, who's on the other side of the trade? It's not your brother, your cousin, somebody else out there. Like, you got to understand where the liquidity is coming from. And that's coming from the big dogs. Thank you, Topaz. Yeah, Citadel. So, yeah, the guy from Citadel, he was trying to explain to them, like, how that whole situation took place with the whole Robinhood situation and why it was pretty much the only option that they had. But they wasn't here. They wasn't having it, okay? And so I'm laughing because, the guy was actually making sense. He's just trying to explain to them market functionality, but who cares? Nobody cared. And so anyway, my whole just look at this thing. I don't think that it's going to end well for Robinhood at this point. They have a target on their back, and somebody got to be made an example out of. I just, fortunately, I think it's going to be Robinhood. I'm not an advocate of Robinhood, not at all. I know Topaz, she's probably ready to bust me in the head for talking about advocating Robinhood. But I think that, for those Robinhood traders, they should actually be paying attention and learn about, like, what's happening, like, with this broker that you're using. And again, it doesn't make any sense to use Robinhood since you have reputable brokerages that, are doing commission free also. So you might as well use reputable firms there to take care of your trades. So that is what was pretty much happening on that end. And then we had the weather concerns. OK, we had, the big snowstorm in Texas. And, again, our prayers go out there to all of our people. We have a lot of, members that's actually in Texas from Wallstreet Jackboyz that have been negatively impacted from that. So definitely keep those of our, our comrades there in your prayers. And hopefully they get a speedy recovery. So that was really weighing in on the markets also. And it's real crazy. You see how, they were not prepared, living in New York, like that's weather you get every day. Like that's just every day. I used to clean my neighbor's cars off like my neighbor, she was like pretty old, like 80s, in her 80s. And so she goes swimming in the morning time. And so I'll go shovel her car out the snow every day, every morning. Like that was just normal everything. My kids, they out, catching the bus, they in the snow, you have to go to work in the snow. I mean, snow up to here. But obviously in Texas, they're not used to that, and so, basically caught them with the pants down. The bad thing is you got a lot of people out of power, out of water, out of food. And there are lots of people whose houses, the pipes are bursting and stuff like that. So, I mean, you can take a look at, who will benefit from this type of situation and who's be negatively impacted. Obviously, insurance companies are going to get smacked up as the claims start to roll out. And then as far as the rebuilding, you may have like the Home Depot companies and stuff like that, people that, you're going to need to rebuild these houses and stuff like that. So who's going to benefit? Who's going to get those contracts? Who's going to get that money? So you can take a look at those type of companies if you're, trying to basically speculate on price movement and make some money off of those situations. But those are all the pretty much the main developments that we had of the week. We had Trump's presidential situation, with them trying to boot him out, basically, that didn't play out in their favor. It played out in Trump's favor, so he didn't get impeached for the second time. Other than that, that was pretty much it on that side there. As we take a look here at at my dashboard here, I got for you guys up. You can see the different sectors that, what was the movement like in the different sectors, and we can see that the energy sectors was moving. Let me actually switch this over real quick. Okay, so we had some movement. This is the last 5 days. We had the energy sector was moving, real estate was down, materials, industrials were up, and everything else was pretty much down except for financials. Okay, so another interesting thing is that the financials were actually up during the hearing, this Gamestop hearing, Citadel and Robinhood. These guys, while we were actually looking at the markets while this was happening in real time. And so a lot of those brokerage firms, exchanges, they were actually making money. They were actually going up because what was being revealed during this hearing was, basically like inefficiencies in these exchanges. And it actually make the other exchanges look better, so you were seeing financials move up like that. And so in the chat room, we posted the watch list for those exchanges. If you guys, want that, just let me know and I'll get it back out to you. But it's in the chat room. So we're looking at as far as that go. And it's taking a look over here at the commodities. Oil, again, going crazy, stupid high. Bingo. This has been an ongoing trend, oil prices rising. Gold took a beating. And we see gold is down here. Now, the good thing about this is that this just, to me, means that gold is at a more attractive price to buy from. We can see that it's starting to try to rebound right now. So we'll take a look at that as well. But the other commodities are actually pretty high. I mean, we saw corn spike out like, I believe that was Thursday, about 4%. It was crazy, crazy blow. So commodities, again, these are the things that, that you guys basically would need to survive. Entrepreneurs use them to make stuff. So things, you got to think about things that you would need. You guys remember when the lockdowns happened, everybody was buying tissue. That's a good that you need. You can't live without wiping your ass. You're going to need the tissues. You're going to need all these things. So we have to think in terms of this economy and what's the outcome of these different things that's taking place here. Okay, so let me actually see if I can pull us to the site. If I have it up now. Oh, there we go. All right, cool. So here go a couple of things before we get into the markets. All right, economic data that played out this week. All right. So we had let's just start here. We had the new residential construction starts that came out. So this data right here just basically gives you some insight on how the housing market is doing. The economy's booming. It normally was, illustrate some kind of growth there. Economy slowing down. You can kind of see, the numbers here start to slow down basically. And so with this data here, I just pretty much highlighted it for you, the quick parts. Building permits, they were up 10.4% above the revised number in December. And the housing starts are below the revised December estimate, 1.6 million, below the January rate. Okay. And that was of 2020, talking about a year prior. Housing completions, this is 2.3% below the revised December estimates, 2.4% above the January 2020. So they're above the prior year levels, but slightly below the December housing rates and stuff. So housing, taking a little breather, basically. And then as we go into, we had the U.S. import and export price index summary. Again, this data came out this past week, and they're telling you right here, okay, prices for U.S. imports increased. So prices increased 1.4% in January. And the largest, they said the January advance was the largest 1 month rise since the index increased 1.4% in March of 2012. So the largest rise since 2012 in imports. Okay, so imports, this is the stuff that, we don't produce as a country. So we import it in from other countries. And they're saying that stuff was more expensive. So by the time we get our hands on it, that cost gets passed on to consumers. This is basically just showing you guys that this is inflationary pressures. Largest advance, let's see, this other one is talking about another large advance. This is the export prices. So stuff that we export, those prices are up also, but not as much as what we are importing. And here in the imports, you can see they're talking about higher fuel and non-fuel prices, both contributed to the advances. Okay, import fuel prices increased 7.4% in January, following advances of 8.1% in December and 4.4% in November. So they're higher. And again, this is before the situation that happened this past week in Texas. I was trying to tell people that, oil prices have been going up before we even got here. And it's pretty much based off of, the election. And so a lot of people don't understand that, but I'll show you guys that in a second. And then the all import excluding fuels as non-fuel imports rose also. And so let me see, non-fuel will be things like food and stuff like that, right? Unfinished metal and lumber. So lumber, the prices of lumber have been going through the roof. We see in the futures markets, we see that lumber's been going crazy. But that also goes with, building houses. You need wood, right? So basically what we get from this report is that there's inflationary pressures from what we're importing. So just keep that in mind. The unemployment insurance weekly claims came out 861,000, an increase of 13,000 from the previous week's revised level. So 861,000 people filed for unemployment. You still have a depressed economy that still hasn't, recovered. 861,000 people filed for unemployment. So that tells us a lot of people that are not productive in the economy. So that's less goods and services. That means you got to import more. Okay. But that's still not good. You need to get those employment numbers up. These guys got to start, you got to get these corporations, these companies, small businesses to hire again. And so with the government regulations, we're still not seeing that happen. Okay. There's a link for the congressional hearing situation that we was talking about with GameStop. Here's a post from Justin about Wyatt fuel cell, natural gas, clean electricity generation system. So that's, again, we'll go over that later. Let's see what I want to show you guys. Here we go. The CEO confidence data came out this week. I'm not going to read the whole thing, but I do want to show you this first part. They said short-term expectations improved as CEOs prepare for fewer layoffs and higher wages. So they don't plan on laying off as much, and they plan on paying higher wages, but that's inflationary. That's called wage inflation, okay? So you guys can actually check that out. But some of this data is not as black and white as you may think it is, okay? You got to think about the lower tier people in the economy took the hugest, the most large blow to, losing their jobs. Meanwhile, the people who could transition to work from home, the remote work, they stayed, they never lost their salaries and stuff like that. Those jobs continue to improve. So even though wages go higher, it doesn't mean that those wages have trickled down to the lower skill employees. Okay. All right. Blockchain. Let's see. Goldman Sachs. Here's an article about Goldman Sachs, being optimistic on cryptocurrencies. We'll talk about that in a second. But the PMI numbers came out also. So the PMI Flash came out, and this is what was in this data set here. Okay. Index at 58.8, 71-month high. Just read the highlighted points. Business in the U.S. reported the strongest monthly expansion in output for almost 6 years in February. So it's a lot of output that businesses are putting because there's a lot of demand for stuff. You need stuff to live. That's what people value. People do not value money. People value the stuff that money can buy. Remember that, okay? Services sector growth hit the fastest since March 2015. So that's looking positive, right? While manufacturing output growth moderated during the month, it remained among the highest seen over the past decade, okay? Extreme weather, this is what they say, slower manufacturing growth was often blamed on extreme weather and existing widespread supply shortages. Supply and demand, these are factors that move the market. Supplier delays hit a record high during the month. So you got a lot of demand, pent up demand. You have more dollars chasing fewer goods, okay? So people still want the stuff, but they can't access it, right? These are the manufacturers that get those raw goods to turn them into goods that we use, like turning grain into bread and stuff like that, okay? Here we go. Demand outstrips supply. There you go again, telling you. Rising at by far the steepest rate since comparable data were first available in 2009. Service providers registered the steepest increase in cost burdens. They're saying that, hey, shit is expensive, B. Cost burdens, okay? These are manufacturers that when they take on higher costs, they pass those costs on to consumers. So your cost of living will go up. That's inflationary. Firms raised their selling prices at the sharpest rate on record. There you go. They're telling you that firms are raising their selling prices. Okay, nonetheless, employment growth remained relatively muted as service providers were reluctant to expand workforce numbers amid efforts to cut costs and uncertainty about the near-term outlook due to the pandemic. Manufacturing job creation accelerated, however, reaching the highest for just over 3 years. So they're saying the service providers, listen, there's still demand there, but they are not hiring on fear, again, so they're trying to cut expenses as much as possible. So those jobs that's not coming back. Okay. So this is how you guys keep your thumb on the economy, like what's shaking, what's going on, because this is the first level before things get to us. So if they're taking higher costs, it gets passed on to consumers. Okay. Why food costs aren't done climbing yet. Here's an article to tell you, food prices going up, right? Everything is basically going up. Okay. And the feds haven't even, not the feds, but the fiscal policy, the spending bill hasn't even gone through yet. So once Biden and them get the 1.4 trillion spending out, that money is going to, stimulate people to go out and spend money. Okay. So it's tax time, tax season, not everybody, get a return, but there are a lot of people that they look forward to their return. And then when they get their money, that's when they normally shop. So tax season is a big time for people to spend money. They get the money to buy furniture, clothing, houses, whatever, cars. So normally we see that normally, okay? The tax season come out. So the tax stuff coming out, the 1.4 trillion spending bill coming out also at the same time. All of this is inflationary. That money is going to get spent somewhere, okay? And whether it's the stock market or whether it's on goods and services, you're here to see, right? But remember, goods and services, this is how the economy, this is the indication of wealth in the economy. It's not stock market prices going up. That's paper prices. That doesn't mean anything. It doesn't add any value to society. Society doesn't care about money. Society cares about the things that money can buy. Remember, okay? So you have, people down in Texas, Louisiana, all the whole area down there covered with snow, okay? Now, if you didn't have power, obviously you can't use a Bitcoin, okay? You need power in order to even use that type of stuff. So it wouldn't even do you any kind of good. So, but Bitcoin was a big topic coming up this week. That's some very interesting developments to go over with Bitcoin. For one, you guys know I don't rock with Bill Gates, but Bill Gates himself, this is what he said. He said he don't own Bitcoin. He's not short Bitcoin. So he don't own it and he's not short. He says, I do think moving money into a more digital form and getting transaction costs down. That's something the Gates Foundation does in developing countries. See, when I first read this, I was trying to figure out what's Bill Gates' angle. You know, we don't even rock with Bill Gates, right? And Bill Gates is saying, you know, he coming out talking junk about, you know, Bitcoin, cryptocurrencies. But I'm like, man, what's this guy angle? You got to understand what's this guy's angle, B. And what he says in here, he says that's something that the Gates Foundation does in developing countries. So it sounds like Bill Gates is also into this whole digital money transformation as well. I wouldn't be surprised if he's helping the federal government to develop the digital dollar. I mean, after all, he's the Windows guy. Every Windows computer, we're on Bill Gates software right now, right? So, okay, that makes sense. All right, so watch Bill Gates. That's all I got to say, because I don't know what this guy got going on, but this is interesting. He came out. He says the way cryptocurrencies work today allow for certain criminal activities. It'd be good to get rid of that. He quickly added, he told about getting rid of cryptocurrency. He said that, you know, there's basically no utility for Bitcoin. It doesn't make any sense. He said this in his first post, and I didn't capture that. But that's interesting. He said, I probably should have said bioweapons, but instead he said cryptocurrency, because I was asking him about the least thing the society can use. He said cryptocurrency. For some odd reason, he thought to attack cryptocurrencies. I don't know what that actually means, but definitely going to keep my eyes on that development. And so, you know, this is interesting that, you know, Bill Gates, who's, you know, controlling what people eat nowadays, he's owning so much farmland. Remember, you need the goods and services, the commodities. Bill Gates is smart enough to go and get that land, real assets, and go get those commodities and control what you eat and all that. So, and, you know, if he's a part of this whole digital dollar situation, which makes it interesting because it's the Windows guy, so I wouldn't be surprised. And Bitcoin, all this stuff ain't nothing but technology. Remember, I told you, if it's on the internet, anybody can make it. Somebody can make a coin better than Bitcoin. It's on the internet. It's not like in the natural world. You can't make a better gold than gold, right? But so on top of that, right, here we go. We had Peter Schiff versus Elon Musk. Now, this was interesting. This just taking place like now, with Elon Musk and Peter Schiff beefing, right? Going hard at it, okay? So let me actually just pull this up, right? So I didn't capture the first post on here, but basically Peter Schiff was responding to Elon Musk. You all know Elon Musk be trolling, right? And so Peter Schiff responded and said something about Bitcoin being more BS than fiat money, you know, paper money. Excuse me. So Elon Musk replied here. He says, in an email saying that you have gold is not the same as having gold. You might as well have crypto. Money is just data that allows us to avoid the inconvenience of barter. That data, like all data, is subject to latency and error. The system will evolve to that which minimizes both. That said, Bitcoin and Ethereum do seem high, laughing out loud. You know, so Elon Musk clowning around again. That's why he got the laughing out loud. And then why does he say Bitcoin and Ethereum do seem high, right? Is this his way of pumping other cryptocurrencies like his Dogecoin and all of that? You know, people call those shit coins. They don't have any real utility at all. Whereas, you know, Ethereum and these other, you know, cryptos do have some kind of utility over the artificial internet world that will be controlled by governments. Anyway, so these are his replies. So Peter Schiff, you guys know Peter Schiff. He's a Austrian economist. He's like the king of analogies. This guy's a gold bug. So for you guys who don't know the history, you know, the Bitcoin community and the gold community, they share a lot of similarities, but they do part when it comes to what is intrinsic value. Okay. And so anyway, Peter Schiff says, as an engineer, okay, he's talking to Elon the Don. He says, as an engineer, you should know the distinction between a tangible element and a mathematical string of numbers is huge. All right, so basically what he's saying is, bro, you know the difference between something that you can hold in your hand versus a math equation, okay? It's a math problem, all right? It has nothing in the real world. So that's what he said, right? And then he says, gold doesn't need miners to power its existence, okay? The laws of physics do that. Gold provides owners with optionality, use, improve, or hold. Bitcoin does not. So he's basically going over the tangible properties of gold that Bitcoin does not possess and how Bitcoin has to be mined into existence and all that other stuff. All right, so then he responds and says, an email confirming gold ownership, either from a private vault or government, is but a secondary layer of trust. It's not the primary, it's the secondary layer of trust. And you can confirm this truth on your own, while Bitcoins ostensible trust layer requires a network of miners spending 5% of his market value a year to do it for you. Then he says, money isn't data. Data can represent money, but can't replace it. Money improve barter. Gold improve money, and data improve gold. Bitcoin is a return to barter. All sellers will accept money. With Bitcoin, you must find a seller who has what you want and wants what you have. Okay, that was just the first part of the juice, guys. Then this guy here, he comes in and says, good morning, Peter. I always see the arguments. He's basically asking about digital assets and the importance of them in the future. So Peter Schiff says, I don't see Bitcoin as a digital asset, but a digital token. It will have a market price so long as collectors want to hold it or traders want to speculate with it. I don't think it will have much value in the future, but digital claims to real assets might. Okay, so he's basically saying that if you can turn those digital tokens from Bitcoin in to collect something real, then that, yeah. But other than that, no. It's not an asset is what he's saying. So this other person, he's basically telling Peter, shut up, basically. The gold standard era is over. So Peter says, paper is legal tender. Okay. So this guy, he's basically talking about, fiat currency is not backed by anything, right? And so Peter Schiff is saying that basically dollars are better than Bitcoin. He says paper is legal tender, a medium of exchange, a unit of account, and governments require their citizens to pay their taxes in it. Bitcoin is none of those. It's just a digital token people collect and trade. It's pure, basically BS is what I think he was trying to say. The stuff that government issues is partial BS. So he's saying the dollar itself is not total bullshit. It's partial bullshit. But he's saying that Bitcoin is completely bullshit. This is the argument, okay? And so this guy tells Peter, you're wrong. Bitcoin has a limited supply. Fiat doesn't. And this guy says it's not a digital fiat. Fiat is infinite. Bitcoin has a fixed supply. You guys know Bitcoin is only 21 million out there. So that's why they call it digital gold, because it has this limited supply for the coins. And Peter says that does not change its nature. The critical difference is that fiat derives its value from faith, while real money derives its value from the underlying use of the commodity. Legitimate currency derives its value from the real money that backs it up. So basically, because Bitcoin is not backed by anything, Peter's argument is that Bitcoin is total worthless. Meanwhile, the dollar, has the government's backing. It's legal tender, and you're required to pay taxes and stuff like that in it. And you guys know the history of money. Money used to be backed by gold. Gold has always been money since the beginning of humans' existence. And, economists, they're debating about will gold continue to be so. Ray Dalio dropped some paperwork that showed throughout history, they always try to go through other means of currencies, like going to paper currencies. They crash, and then they have to always go back to gold. And the thing is that this is an interesting beef. This has been going on for a while. I don't know if you guys noticed this or not, between Bitcoin and gold. But a lot of the Bitcoin guys, they know gold. They understand, they know the value of gold. But I think what it is that people are betting on a totality of digital society, meaning that, you're in the real life matrix. Basically, we're going to be operating in this computerized world, which, we can see evidence of that taking place. It doesn't mean that we'll go completely into that zone, but that's where it looks like we're headed at. And I think that, with the crypto guys, they believe that that's what it's going to be. And, they use these cryptocurrencies, the utility of it as far as the purpose that it serves across the web. Banks are already using it. Big companies are using, the blockchain, I should say, not the Bitcoin as a currency, but the application of these things in the computer worlds being more secure and stuff like that. And so a lot of people are trying to get in on that. And, they see, these cryptocurrencies as like how the internet was when it first came out. And so basically saying their argument is that we're trying to get in, early before the whole world adopts all of this stuff or whatever. And the gold bugs, they have a big problem about, intrinsic value. What is intrinsic value? It's got to have some kind of usability. It's got to, have some kind of real value in the real world. So supply being limited is only one of those things, but it also has to have usability. Can you convert it into something usable? Can you turn it into something that people can really use, that people actually want? And basically he said, they're basically saying that Bitcoin doesn't have any of those things. And so anyway, these guys, they went further on. They dropped some videos on each other and everything. But I just thought it was interesting. Elon decided to respond, and Peter Schiff, I guess, ate him up or whatever. So he basically, he's saying, they're all saying is BS. But understand this. The Bitcoin community also understands some of the same principles that the gold community understands. They're trying to create a digital gold, basically. And so, but what they understand that is the same is that inflation is going to destroy the current system. So they both agree on this. They both understand and totally agree that the dollar is going to be destroyed because of the powers that be, the central bankers and the politicians. They are, whatever they're trying to do is going to destroy the dollar. So we've been seeing the dollar just losing so much value, continue to go down, and people are buying stuff. People are buying assets. People are buying, getting the hell out of the dollar. So this is one of the reasons why Bitcoin is continuing to go up so high, right? And the thing is that gold actually hasn't been going up high as of late. There's been a lot of promotion of Bitcoin. I mean, you see commercials if you browse YouTube any place, even in your inbox, you're just getting hit with Bitcoin all day. They're trying to promote it. And like I told you guys last week and the weeks prior, what I believe is taking place here is that the government is not afraid of Bitcoin. They actually are fine with Bitcoin because it helps with their agenda. Governments always want total control. In a digital world, they can control all. Gold, the reason why you buy gold and silver, because listen, you don't have to, they can't track your gold and your silver, okay? You're not paying no taxes on this stuff. They can't track it. So no, they don't know where you have it or none of that unless you tell them yourself. So even when they try to ban gold in the 30s under FDR, people they was asking people to turn their gold in and it was going to give you some money. They didn't totally just rob people. They just going to give them money in return for their gold. But people didn't turn their gold in. So same thing now. So if you want some money out of a digital system, then you definitely want to have gold and silver. And I wouldn't say, Bitcoin or these cryptocurrencies are totally bad. Maybe they have some kind of use in this digital world that we're going into. But I think that the government is okay with it so that people can have this mental adoption of just being digital with money. You got the coin shortage signs all over the place. They're not going anywhere. We're already phasing this dollar thing out. With all the spending, inflation is basically going to destroy the dollar. So that's what this whole thing about. Anyway, I just thought that I would tackle that while this is going on and show you guys Dr. Burry. He posted this as well. He says speculative stock bubbles ultimately see the gamblers take on too much debt. Margin debt popularity accelerates at peaks at this time. The market is dancing on a knife's edge, passing investing's IQ drain. And stock group hype add to the danger. So he's basically sounding the alarm. He also went and said that people said that he didn't warn everybody about the great financial crisis, 2008. And he said that he did. People just didn't listen. And he says he's warning again, and people are still not listening. So if you guys ever watched the movie Big Short, you will see what I'm talking about. This is the same guy that movie was about, Dr. Burry, who predicted all of that. And they were laughing at him. They was taking his money, and he made a lot of money off of that. But he kind of resented it at the same time. Okay. So, and this guy, Dr. Burry, I follow him ever since then. And, after he had stopped investing for a while, and then he started coming back. And when he came back, he was investing in water. So when I first started trading, some of the first stocks that I was buying were water stocks. I didn't understand. I was like, this guy's a genius, right? And why is he buying water stocks? I didn't even understand why the hell this guy who's so smart, he can figure all this stuff out. Why was he buying water stocks? And so I started doing some research, looking into, water stocks. And I didn't realize that there are countries that actually cannot grow food, like war-torn countries like Iraq and all these other places. They can't grow food on their land. They don't have the proper, ingredients to grow food. And so they have to import their foods. And so you need, countries to produce and grow these foods, but they need water to grow the plants. So this guy was saying that he's invested in water stocks for food. Okay, so I don't know if that went over your head, but let that marinate on you. He's investing in water stocks for food. Anyway, this is Dr. Michael Burry, same guy. So he posted this chart here, and this chart here is showing the gray lines is recessions, red line is margin debt. The blue here is the S&P 500 as the stocks go up. So he's showing that when margin debt as the margin debt basically go up, the stock market goes down, okay? And then when it goes down, the stock market comes up. So he's showing a correlation here. So the debt goes up, stock market crash, okay? As the debt levels contract, the stock market rises, okay? So interesting on this chart here, okay, he's showing the debt levels down there, S&P all the way up, and he showed it kind of come back up here and then came back down. So it looks like, perhaps this will do the reverse, because this is like a whole change right here with this new projection that he has, the way the market is pumping. So basically the markets, they are very debt, high and manipulated. Federal reserves are suppressing the interest rates. You guys got to understand the importance of interest, the time value of money and stuff like that. It's all economic principles that play a role into what we're seeing now. But when the feds and the government intervene, they're creating massive distortions in the economy. I tell the story all the time about ants. When I was a little kid, I used to study ants a lot. I thought it was cool because I heard something about Napoleon Bonaparte, who was a great general, studied ants to build his military formation. So as a kid, I used to love watching ants. I would sit outside and just look at the ants, watch them build, do all kind of stuff. And I would do stuff like take my finger and I would mark my finger right across their pathway that they're marching to and just observe how the ants behave. And it's interesting that when I interfere with what they're doing by simply marking my finger across their path, I destroy the scent path. And what happens is the ants, they get into a disarray. They get crazy. They don't know what to do. They just start going crazy. And, if you leave it, for, a couple of hours, they eventually come back together. But for that moment, they get all crazy. They don't know where to go. And so that's the way that the financial markets work. When the feds and the government do what they're doing, they're distorting that. And entrepreneurs, they're in a disarray trying to figure out how to make things work. Last Game Plan Sunday, I made a short snippet on Facebook for you guys to check out about Chick-fil-A. Look at how Chick-fil-A were able to get their business model together quicker than everybody else, where they're utilizing their real estate much differently, more efficiently. They maximize the entirety of their real estate from their parking lots. You can't even park there no more. It doesn't matter because they got cars flowing throughout the parking lots. Inside, they have warehouses, basically. They turn the dining spaces into warehouses where they're storing and stocking up on all the goods that they need to serve the customers. And so they're not cutting hours. They're not cutting staff. They're increasing staff and they're pumping out. So they're more efficient. That's one example of a private market, the private citizens being able to try to maneuver through. But you have a lot of other companies, they're still trying to figure out how to operate in this new society. And so that's what makes this market so tricky and very hard to predict the outcome, because we don't know who's going to sink or who's going to swim. Obviously, those that are closely aligned to the government's back pocket, they're going to be the ones that benefits, right? So you see the Walmarts, Amazon, those are the companies that thrive. Meanwhile, the other companies, small business had to shut down, so they didn't. That's not a free market. That's a government control market. So you have governments controlling, they mess up and distort prices, okay? So anyway, there's a file that's here on the website that Dr. Burry also posted, and it's from the great Ludwig von Mises from the Mises Institute, which, I've studied over a year of Austrian economics myself. So I speak from that lens. So when people have questions about my thought process and while I'm explaining things, the way that I explain things is from my training. But anyway, this article here, it's about 160 pages. If you want to get into it, it'll really teach you about the inflation that we're talking about and stuff to come, and about the death of currencies, basically. So anyway, he dropped this also. So I thought I'd share this with you guys as well. All right, so I know that I'm a little over time. So what I'll do is take a couple of names from you guys to take a look at real quick, and then we'll bring the session to a close here. All right, there's a couple of little articles here as well for you guys to check out on the news feed. And you can see, obviously, in the calendar here, the next events that are taking place coming up this week. If you guys haven't used the calendar, and you go ahead and drop your stock tickers in the queue, and I'll just take care of those once I show you guys this real quick. But if you go to the events page on the website, and I like to have it right there on the news feed, it's kind of like a little dashboard for you guys. to see what's coming down the pipeline here. I like to go to the events calendar and, just go to the, I like to look at it from the monthly view to try to get a view, get some idea of what's, coming down the pipeline here. So you guys can see right here, important information that the markets should be actually looking forward to. So you guys can see that. Okay. Country unemployment and wages for the third quarter, persons with disability labor force characteristics, preliminary U.S. imports for consumption of steel. We have another one coming out as well, but then we have the advanced reports on durable goods this week, preliminary U.S. exports up to China of selected Schedule B commodities, so it's export information, an advanced economic indicators report, international trade, retail. So we basically got some trade data that's come out this week. All right. Cool. So here we go. Markets are extended. This is the S&P 500. Let me just pull that up a little bit. You guys can see how we're struggling right here at this level. All right, we're struggling right here at the 127. Price is starting to come down a little bit, but it's right on the mean, so it's not nothing negative. Still bullish outlook. You stay bullish until price breaks the 9-moving average right here, or the 8-moving average, whatever average you're using. So price is still above this, so it's not broken yet. But if that do break, then okay, you will see a nice healthy pullback, normally to the 21, the 20, or the 55. It just depends. But it's the area to watch right now with the weakness in the markets last week. I wonder if we'll get more weakness this week. Okay. Can anybody else see the screens right now? If anybody's having any issues with the screens, let me know. I can still see it on the display side, so it'll show up if you can't see it. He wants to know about HZO. All right. Marine Max. So yeah, this one here has a squeeze on it, and looks like I charted this a while back, but we have new peaks and valley lows. So what we'll do is just use the Fibonacci here from that high to that low to pull some levels on here. Just looking at the chart itself, we're seeing that the price is moving a tad bit higher. Okay, price is above the moving average, so it's bullish. We're in a squeeze here, and you have the trend that's moving up. So for that reason here, just looking at the technicals, this is a bullish pattern here. We got targets up here at 52, 52.40. You can just round it up to like $53. First target, second target at $55. So you can round it up to about $56. Okay. All right. Anybody else got anything else that you want to take a look at here? We had the those financial stocks that was moving last week. The crypto stocks was moving up. And what else we got here? So this week, though, I think that we got enough pressure off in gold. All right, so with gold smashing down to these lows here, I think that we may possibly see a reverse. I'm seeing some reverse candle patterns in here on gold. This is obviously a floor here. It'll be interesting to see if gold reverses off of this floor. We can see prices already starting to come up some right now. And so pay attention to some of those gold stocks. I know that we had the some of those copper stocks that was moving up last week. And if you want that list, let me know and I'll get that out to you. Terrence says DRI. So with the Darden restaurants, you can just take a look at this. It's a flag. It's a bull flag on there. It's not quite overbought. I think that, this is still bullish, definitely. You got some upside potential on this one here. Let me actually pull out some extensions beyond where we are. All right. So, again, if the economy is opening up, okay, if the economy is opening up, restaurants should open up. The restaurants open up, Darden should benefit from that. Again, you can see the bull flag here. These extensions right here are a little low actually. So, but I can see at this extension at 145. Yeah, I think that, again, if this thing is going to be, piling up on what I was just saying, 145 definitely should be a good target for it. But we have to see. But that's the story behind the technicals. But the technicals are intact. That's what we got here. And I got a confluence of targets right up here around 156 zone right there. So, but this is the way I see it. Yeah. So, and then, again, when you're in an inflated market, the oversold and overbought territories, these things can play out a little more in this zone than they normally would. So even if it get there, it doesn't mean, that, oh, I don't need to do that. You just need to, approach it with more caution, and you may want to, put on a stop loss, just in case it was to break. All right. Cool. Anybody get in on any Chinese stocks last week? No? Okay. Anybody taking a look at any of those stocks from the energy stocks, natural disaster type stocks? Nothing. Okay. Well, you guys already know where we at all day throughout the week. We're in the chat room live right on the website at wallstreetjackboyz.com. So make sure you check us out right here on the website. In the chat room, every day somebody is going to be in there, whether I'm there or not. Somebody's always going to be in there. So you guys can check the chat room out right there, get some plays, call some plays, help out your comrades. But with that being said, man, I'll let you guys get to it, and then we'll catch up. Y'all have a good weekend. Peace.